Hey, good morning, Marty.
Morning, Ed.
All right, it's a great topic today. This is financial advice and financial planning for small business owners. And we live in a world today where there's so many entrepreneurial activities or opportunities. And the question is, what do I do when I get started? So this morning, I thought we'd, talk about a couple different scenarios. Let's say you're just starting your business. Let's say you're looking to get into marketing, or you're just starting a painting business or some kind of contractor business, or you're a broker or a lawyer, whatever it may be. So should they be thinking about, the person that's just getting started, or they've started and they don't really have a strong financial foundation or plan put together? The other one is, there's a client that we work with out on the West Coast, and he's a painting contractor. When we started doing the Google search optimization, everything, he was probably doing about $40,000 net profit. He's now up to $400,000 or $500,000 a year. So when that person is starting that journey, utilizing the internet to generate profits for their business, what is their scenario? What should they be thinking about? Because their scenario, their financial scenario, is going to change. And then you have the other scenario. We deal with a lot of businesses that are like $1 million to $10 million, and some bigger. Let's call them $500,000 to $10 million businesses. So what should they be thinking about? So if those three different scenarios. So I'm going to throw the ball over to your court and let you run with it.
Okay, good. And this is important because I started in the same method back in the mid-'70s. Went from working construction at 21 years old, out of high school, and then started as an independent contractor with just doing insurance back in the day and 1099 income. I haven't been a W-2 employee since early 70s, first quarter of 76. That's good stuff. But let's overlay on top of all this is the marketing. So that's so important because a couple things I heard one time. I heard that not marketing is like winking at a girl in a dark room. You know what you're doing, but nobody else does. Okay, so you got to let people know what you're doing. And Dan Sullivan in the Strategic Coach program said, it's probably more important to be not just the doer of your thing, but the marketer of your thing, whatever that thing is. So it's a great example was your painting contractor. If he wasn't marketing, just putting ads in the proverbial yellow pages or something, then he wouldn't be doing the business he's doing now. So let me share you the tool we use here is the key elements of a comprehensive financial plan we use with every client. And I think the three most important things right out of the gate here is number one, cash flow. I was talking to somebody one time. He said, I was making money. I hit a dry spell for about 3 months, not doing anything. So it's off and on. I said, is this a business or is it a hobby? Because if you're not making any money, it's not a business, it's a hobby. Right? So you got to decide, is this the right thing for you to be doing? So there's a lot of issues to go on in there. Second thing would be income tax planning. Somebody starting a business or even just starting to be successful, making money, but even just starting, is that you're probably going in as a sole proprietor. So you're all of a sudden, there's no taxes being held out of any money you're making. You've got to do that. And funny, Uncle Sam still wants their share at the end of the year. And unless you're all cash business, it's all reportable. So the biggest thing I think where people get stuck right the first year or two is they're behind the 8 ball on their taxes. And that's too much stress because that's as bad as a credit card interest. And they're more vicious on going after the money. So income tax is important. And the third thing will be risk management. You've lost all your insurance probably because the employer's not providing it anymore. A lot of people just get what the employer gives them. They just have what the employer gives them. So now all of a sudden you got to buy health insurance. You're going to need life insurance. You got to protect your income if you become disabled. There's a lot of things going on there. So let's start with the first thing on the cash flow. Making sure that where's the money coming from to start this business? A lot of times people say, I'm going to borrow from my 401k. I don't see too many people that borrow. I see a lot of people that take it. They don't put it back. They multiple times borrow from how'd you do on the first borrow? They don't pay it back. Now all of a sudden, is this a smart thing to be doing? Because you could have a substantial amount of money saved for the 401k for your future retirement. You're going to use that to fund your business, not good money to do that with. Yeah, you're going to be in a lower tax bracket. You're starting out at 0, but any money you take out of the 401k is taxable. If you're under 59.5, there's going to be a premature distribution penalty at 10%. So for every dollar you take out, you might be paying 30, 40% of it in taxes. So you're really not getting the full dollar. It's like a bad place to take money. So if you're looking to start a business and your 401k or IRA needs to fund it, you're probably not ready yet. And you probably got to look for money from elsewhere. Make sense?
Yeah, absolutely.
Yeah. And then is that new business going to be able to fund their lifestyle? I think the big thing out there now, the big buzzword I see is a side hustle, right? Everybody wants to start a side hustle. That's good. There's a lot of good opportunities there. And you hear a lot of examples of people that in a short period of time, they were able to quit their job and their side hustle is now their full-time hustle. But just like anything, is that the normal or is that the exception to the rule? Or are people coming in there and getting, they weren't as lucky? So I think do your due diligence. Phasing into something like this, if it's going to work, your second career, if it's able to take over to be your first career and you can quit your job, I think the best thing to do is try it, not just jump in head first. See, I don't know if maybe statistics said, but most businesses fail in the first year or two.
Yeah, even over 5 years. I think this is one of the biggest mistakes because we do a lot of coaching for small business owners, marketers, and that kind of thing. And a lot of them are jumping in, they're winging it, and they've got these dreams in their mind of this amazing profit opportunity. And the important thing, I think, is to look at something like this before you even start, because you really got to get this foundation put together first, then start your business, not start the business and just throw caution to the wind.
Yeah, absolutely. Because then, as I said, the next thing that comes in is the income taxes. You've got to be putting money away out of every dollar. And it's tough to do because you might have just quit your job and now you're making this money and you need it. You need it to pay the mortgage, you need it to buy food, things like that. And then at the end of the year, your accountant files your tax return, you file your tax return. God forbid you don't file a tax return, but all of a sudden you get a letter a year or two later from the IRS and say you owe this much money. And not a good position to be in, especially if you're still spinning your wheels a little bit to get things going. So pay attention to the income taxes, get a good accountant, and get a good advisor to help you overlook all this. And that could be a true financial planner or a CPA. That's all important. And you got to address the risk management. You're going to need health insurance. God forbid, don't go without health insurance. You lose the whole thing, your house and everything. I remember doing an interview years ago. My dad was doing collections for a finance company. He was doing it for a hospital. And I remember one time, this one fella called him up. He said, why did you just put a lien on my property, on my house? He said, what do you mean? He said, because you got this hospital bill you're not paying. Healthcare is not free in this country. And it's best that you either have insurance or you pay for it yourself. And you don't want to take that risk of losing your house.
What you're talking about are real numbers. And when you're starting a business, if you're just starting your business, you've got to consider the fact that it's going to take you a year to get going.
Yeah.
But if you can get going in a week, that's great. Or a month, most people hope that's going to happen. But the reality is, I don't care what business you're in. You're a real estate broker, you're an insurance broker, whatever, unless somebody's paying you a salary. If you're going out there to do your own side hustle type thing, it's going to take you a year. So you really got to consider how much money do you need to keep you going for that first year or 2 years. And what are you doing to feed this thing? Taking care of your insurance, your taxes, and then putting some money away.
Yeah. Yeah. So let's say you get through those first several years, more likely. You get through there, you're starting to make some money. It's working out, whether it be a side hustle, and you got to decide whether that can replace your full-time job, or you just went head first into the pool and it's working for whatever reason. So that's good. So now you're starting to make some money. There's issues that come up. So let's look at some tools that we can provide everyone. This is, it addresses your personal cash flow issues, some questions, some yes, no questions to see where you're at, business cash flow. And then you get into what type of legal formation, what entity, tax planning issues, all the way to other, as far as insurances and things like that. So you're making some money. You want to decide now, and you're all 1099, unless you're incorporated, but most of them you can still file as a 1099. And 1099 means nobody's withholding anything from your checks. You've got to put money away. You're going to have to file quarterly now, estimated taxes. So you should have an accountant. Shouldn't be doing this yourself. Don't do something online. Get somebody that knows what they're doing. You're going to have to pay quarterly taxes. And so you're starting to be successful. You want to maybe start a retirement plan. Let's talk about what were the issues before we get into this. What was the issues with your advice that you'd given to this painting contractor? What did he start doing when he went from 40 to 4 or 500?
What happened was the internet, once he started to get the exposure on Google, the business started to come in. And there was actually one particular piece of content that he was ranking for on Google, and that ended up being a $400,000 profit on one project. And so I said, not only that's phenomenal that you got that piece of business, but what are you doing with that money? And it becomes a nice system because now his rate of return on the internet is phenomenal. And then he can take that money and give it to his financial advisor to reinvest it, to set up what he needs for his family. But what happened was that he didn't know that this was going to happen. This profitability was going to happen. It just started to happen. He never in a million years thought, he's like many businesses that go into the internet and they're like, I need a website, but he didn't know that it was going to produce these kind of results. And then he was unexpected. I told him, I said, you've got to find a financial advisor. You've got to start putting your money away. You've got to start setting things up for your kids, college funds, all kinds of things like that. And he did that, and it's worked out really well. And
that's good advice. Yeah, it's good advice, Ed. He's one of the smart ones because you see something like that, it's what's called sudden money. And it's like people that win lotteries or get an inheritance. I'd say probably 80% of the time, whether it be a lottery winning or an inheritance, it's gone in short order. All right. It's a good thing he didn't go buy the big car, the boat, or a fleet of trucks or something with that money, because they think it's coming every year. The small business owner thinks, I've made it. This is going to happen every year. It might not. Okay. There might be a little rough seas, could be ups and downs, the ebbs and flows.
Absolutely.
And to spend it like it's coming every year is very dangerous. So he's one of the smart ones because look, he wasn't making any money. He didn't have a financial advisor, and financial advisor didn't want him. He didn't make any money. He didn't have any money. So for him to go find somebody like that was smart, good advice, and smart on his part to take it, and then find somebody who could help him make good decisions with his money. And just the purpose of in my position is not to tell people what to do, is to get them, but to have thinking, have them think about what they should do if things they're not thinking about. And there's a lot of people don't know in different areas.
One of the things that was interesting about once he started to work with a financial advisor, he looked at his business from a completely different perspective.
Yeah.
All of a sudden, he's looking at his business as the way somebody who owns a strip center or an apartment building would. It's like now he's looking at it as not a painting business, but he's starting to look at it as an income producing financial instrument. And that's really the right way to look at this. And then what does it look like? So if you go from $40,000 profit a year and all of a sudden you're up at 100 and growing, and then you start to take that money and you give it to a financial advisor, it starts to drive his business. He looks at his business more as a business operator than what is it, right out of E-Myth? They talk, the book E-Myth, I don't know if you're familiar with that, but they talk about the difference between somebody who's a business operator and a contractor in their business. And that's what he did. And it really had a big impact. And I think that's something everybody should be considering.
Yeah, I heard this. I'm not sure if I read this in the E-Myth or Dan Sullivan, strategic coach, had said it, but there was it was an example of a person that was struggling, making bad decisions, spending money, just doing foolish things in the business. He said, and he was calling himself an entrepreneur. He said, you're not an entrepreneur. You're in a small business and you're working for a fool. So it's good to get the advice of other, because look, it's the first time you're doing it. You've never done it before. All of a sudden you want to go be a small business owner. What history do you have of doing this? So it's good to surround yourself with people that have been there before. So once again, like your painting contractor or somebody who's started to make it some money, you are responsible for your retirement now. There's no company plan. They're not doing matches. You are the company and the matcher. So you've got to make your contributions. So what are the types of plans that you should have? There's one is the simple plan for 100 or fewer employees. It's simple because it's simple. but it might not be the best choice. There's SEPs, which allow you to put more money away. You have employees, you could do a 401k, profit sharing, these three here, safe harbor. But probably the one that is very attractive is the solo 401k. You can see it's for business or self-employed individuals with no employees other than a spouse, which is a lot of businesses. So if they don't have any employees, you could put a decent amount of money away on the solo 401k, and it works like a 401k. You're able to take loans from it, which you don't have in these other plans. They're called distributions. Right. So it's good to work with an advisor that knows these. So these are tools that we'll have on our website. People can download if they want. I think to summarize here, which this is an asset map we do for everybody. It's good for the husband and the wife, the spouses, to know what they have. And if they're going to need to get some things, what should it be? What are other people like us doing that we're not doing? Do you have the proper insurances? Where are your assets? Where's your income coming from for the spouse? If you have a high earning spouse, it might be easier to start a business for the other spouse. It could be easier to do that. But so where's the income coming from? What assets are they? Remember, if everything is in 401ks, might not be, it's not the best choice to go get money. There would have to be money in other assets, whether it be joint accounts, things like that. So we list each person here, what their assets are, what their income is, protection, joint assets. So it's good because a lot of times one spouse handles everything, the other one doesn't know what's going on. So it's good for the one handling to see what they got, and the one that doesn't handle everything to see, okay, are we going to be okay? What do we have? Am I protected?
This is great. So let me ask you, so anybody that's watching this video, if they're watching this far, they're thinking about this pretty hard. What would be the next step? Can they give your office a call, set up an appointment, or what's the starting point? What should people be thinking about before they call you, and what happens on that call, and what happens after that?
Yeah, we call it the right fit discussion, basically a discovery call. There's no charge. They could ask us questions and see how we can help them. What would be a good course of action to take? What advisors on the team would be best suited for them? And just basically discovery, just a conversation, just saying, here's my situation. And then the questions that we're both going to add, they're going to ask, can you help me? And we're asking, do you want us to? Right. And so if we can help you, here's what we can do. And so there's a basis for a relationship. And if it's not that they're not ready, it's not a good time at this moment to engage with us. We can give them some direction on some things they should be doing in the meantime to get things going.
Yeah.
But they could be like your successful person coming in. Look, I made it. I thought so far, I think I'm doing really well. What are some things? I want to make smart decisions with my money. What should I be doing? So anyway, I say, don't be intimidated if you're just starting out and you want to talk to somebody, because I've been there. Okay. We've all been there. Everybody on my team has been there. Okay. We started out getting checks have to do withholding. We had to do this ourselves. So we know the growing pains of going through that to the point where now, okay, you're making money. Here's the things we're doing. And in between along. Yeah. Just a basic conversation.
Yeah, and this is really great. I think anybody who, a great conversation as a sequel to this would be to address, what do you do? What about the businesses that they've achieved $1 million, let's say, in net profit, or 5 million or 10 million? Because not everybody's, a lot of businesses, they may be focused on their business, but are they setting themselves up financially, like with a financial plan for bigger businesses? So that might be a great sequel to this conversation.
Yeah, because that's a whole different, there's a lot of stuff to do. We could go for another half an hour.
Yeah. All right, awesome. We'll post the phone number and the link to your website below. And anybody who wants to give you a call, set up an appointment, definitely encouraged.
Yeah, we enjoy having those conversations because we've been there.
All right, awesome. Thanks, Marty.
Thank you. Have a good day.